Investors are looking anywhere and everywhere to put this money, but they're not putting it in China. They're only going to become more restrictive, more controlling. That means bad news for foreign-owned companies or foreign-controlled, minority-controlled JVs in China. You've made money on paper in China. You can't take the money out. Good luck. Article here saying hedge funds are slashing exposure to U.S. stocks that count on China. Came out with we covered this maybe a couple weeks ago, where you had 8.1% of Alibaba's investor base sell off their shares in the past few weeks. Alibaba, all of the Chinese tech monopoly stocks have been way down the past number of months, really starting back in the fall with Ant Financial. Now it looks like for Ant Financial, they're going to actually have to spin off their lending app into a completely separate product. So where the U.S. judge Gonzalez Rogers says, I don't want to micromanage the product of Apple in that case. Instead, you've got the Chinese government saying, yeah, Ant Financial, you're going to have to split apart these products. The lending app is going to have to be a completely separate experience. Might even have to be a completely separate business. Might even have to be capitalized completely differently than Ant. We'll see how far they go. But you want to talk about U.S. courts versus just Chinese government. There's no comparison here. Chinese government saying, yeah, you got to break this out. We want separate apps. We don't want these apps, these experiences linked. Break it out. Or I'll just shut your whole company down. And probably and put your founder back through reconditioning when Jack Ma just disappeared for a month, right? One of the richest guys in Asia, just gone for a month. No one could find the guy. Completely normal. So hedge funds are slashing exposure to U.S. stocks that count on China. This is long overdue. This has been needed. The China bubble is a massive bubble. Here's my favorite analogy to this. Hey, put $100 into this new crypto coin. Boom. But in order to get the coin, you got to go get this crazy different kind of wallet, different experience to get that coin. Okay. So boom, you put $100 in. Whoa, look, my $100 is now worth $10,000. I just made $9,900. I put $100 in. I have now $10,000 worth of this new crypto coin. Hey, that's great. Can you take the money out of the wallet? And can you withdraw your $10,000? No, I can't. But I made like $10,000, right? Did you make $10,000 or did you lose $100? I think you lost $100. That is China for U.S. investors, unfortunately, and U.S. companies that have invested in China. You can't get your money out. You can't get your ownership out. They've stuck you into a JV. You're probably if you have majority control, it's probably just on paper and you really don't have majority control. You've put all this money into China. You've made money on paper in China. You can't take the money out. Good luck. U.S. investors, thank God, are waking up to this. You can see here, companies with elevated sales from China were dumped as fund managers cut their net holdings by 26% over the month through late August to the lowest level since April 2020. That may seem like not that big of a deal, but you have to remember, since April 2020, we've had trillions and trillions and trillions of dollars pumped into this economy, right? These investors are scrambling for places to put this money. Scrambling. I was just talking about the inflation that we see with tech stocks and just the insane valuations we see with tech stocks. Investors are looking anywhere and everywhere to put this money, but they're not putting it in China. Hedge funds that make both bullish and bearish wagers on stocks are slashing their exposure to American companies that lean heavily on China for business, such as Las Vegas Sands, with the Macau gambling, General Motors. Those counting on the Asian country on China for supplies saw their ownership fall 17% for the bottom range of the past year. So 26% for companies that have a lot of sales in China. 17% dip for companies that have a lot of their supply chain linked to China. Love this news. Why do I love this news? Not because I'm anti-China. I am anti-CCP. I am anti-communism. I am anti-totalitarian authoritarian regimes. Full stop. What I am also anti is American companies and American investors being defrauded by fraudulent CCP-linked authorities, right? Whether it's the lack of financial transparency and regulation that we have in China, right? You look at the Chinese stocks that are listed on U.S. exchanges, we have no visibility, right? They could be cooking the books for any number of things that we have no visibility in. They don't have to. Every other country in the world that lists on a U.S. exchange has to comply with a much higher degree set of regulation, auditing, transparency to inform U.S. investors. That's not even what this article is talking about. This article is talking about U.S. companies that have exposure to China. So think about the exposure you have as a U.S. investor in a Chinese company. That's not even what this is talking about. Then you have a step down from there, the exposure of having sales come from China. This trend is only going to continue. It's not going to, right? The Chinese government isn't going to just do a 180 and say, you know what, we actually became too authoritarian. Let's just, let's open back up again. No, it's not going to happen. They're only going to become more restrictive, more controlling. And that means bad news for foreign-owned companies or foreign-controlled, minority-controlled JVs in China. The rhetoric against foreign companies, American companies, we saw what they did during the trade negotiations between the U.S. and China leading up to 2020, kind of vilifying American companies. We've seen them try to do this with Tesla, for example, to try and exert pressure over Elon. I think it's related to SpaceX and Starlink and other things, but maybe they wanted some of his technology for the EV charging. We'll see. I don't know, but you can't trust what's going on in China. If you're trying to sell stuff over there, if you're looking at making more investments over there to support your sales, I would cut that and really just try and minimize this. I love that these hedge funds are waking up to this. Supply chains, we have the CEO of Xometry, a $3 billion B2B marketplace, helping local American machinists create custom parts and engineered products and parts for companies that need on-demand or prototype parts. So how can we bring the supply chain back to the United States? How can we make Made in America a thing again? We talked about that. Go watch the video. It's fantastic. Sad to see Apple, the shining example of a U.S. tech monopoly, take off. Designed in California. Remember that? Designed in California? It's gone. You want to know why? Because the Chinese didn't like it. Apple caved to their supply chain China to take off designed in California. Steve Jobs rolling over in his grave. Such a sad, pathetic move on Tim Cook's part. U.S. hedge funds are getting more concerned about the place of China in the global economic system. They're less willing to bet on the continued favorable trend that the country has had. Here are the Chinese tech stocks in red compared to the QQQ, the NASDAQ 100. Very smartly, WisdomTree with Platt actually limited the exposure of Chinese companies over a year ago. Somehow they saw this coming. So Chinese, actually all foreign exposure, China included, is limited 10% of the overall weighting of the index. At the moment, U.S. companies doing business in China face potential risks of slower growth in the country and increased regulatory scrutiny. In either case, the logical thing to do would be to reduce your exposure to companies that have either one of those situations. It's only going to get worse. Hi, I'm Alex. Thanks for watching the show. Make sure to hit that subscribe button, but even better, make sure to follow us on Odyssey, follow us on Rumble, and text us 203-646-5159. Text the word Monopoly. You'll be subscribed. You'll get updates about when we're going live, our latest videos, and we'll send you even a little goodie bag. And in the event that we all get banned from big tech, we'll still be connected.